Welcome to another edition of the Trading Bell. This week on the program, we'll be focusing on some of the interesting aspects that emerged at the Building Africa Financial Markets Seminar that happened here in Nairobi. And I just want to bring in my two guests. And today we actually distinguished to be having two panelists who will be taking the conversation forward. What is your general assessment of where we are when it comes to financial sector deepening?
So I think African exchanges have made great strides over the last few decades in terms of deepening their markets through investor education, investment in technology, adoption of international practices and standards. But as I noted in the report we presented, as part of the findings of the report we presented yesterday, one of the key differentiators for exchanges going forward is going to be provision of market integrity. And I think that's an area where exchanges on the continent and elsewhere really need to focus efforts in terms of making sure that the markets really protect investors, ensure that the issuers are doing what they're supposed to be doing, and that we have a sort of well-established network ecosystem of participants in the market and regulators who really are looking after the quality of the markets overall.
All right. Barry, you've raised a very important point where we're in a day and time where data sanctity is very crucial. And what can change so that we can move to this new shift?
Well, I think that, technology is a great enabler in this space. Listen, I think the challenge around, we heard someone speaking yesterday about the challenges around cybersecurity. I think this is going to become more pressing. So I think we need to collectively as an industry think about what processes we need in place, what governance we need in place around ensuring data integrity, data quality, but also we need to make sure we make the right technology investments. We had someone speaking this morning about RegTech, making sure we have the right investments in place to deliver on the requirements of the future.
All right. We'll be coming back to you, Cleary, on RegTech as well. But Anthony, looking at the sustainability agenda, how are we performing on this?
Well, I think Africa has a very positive story to tell in terms of market innovation to support sustainable development. When we look at certain instruments, for example, equity indices that are focused on sustainability themes, if you look at the Johannesburg Stock Exchange or the Egyptian Stock Exchange, they have had these types of indices for more than 10 years now, and they're very useful. You see many markets, including the Nairobi Securities Exchange, looking into green bonds, the development of these kind of products. So I think there's really important stories to tell in Africa, lessons that I think the key thing is not necessarily about importing lessons from somewhere else to Africa. There can be more work about sharing experiences between different African markets, because there's a lot of interesting things happening in different markets around this continent.
All right. And speaking about different things happening in the markets, well, it's also very critical to know, for instance, right now we are seeing a lot of exchanges trying to really embrace technology. At the same time, we have the disruptive nature of technology. Where do we work out a sort of common ground so that we are able to ensure that as much as exchanges go the technology way, there's also an element of risk management in this?
Yeah, well, you ask a very big question. Technology is a moving thing, and I think particularly in the world of finance, everybody is very concerned about this issue. You look at the infamous flash crash in New York a couple of years ago, where you have so much trading going on now that's automated and so on. But as Siobhan was referring to earlier, the advances in technology on the regulatory side are very important. I think one of the key issues, and this really reinforces the traditional role of stock exchanges, is that having a central, well-regulated exchange is still a very important, even more important facet in the world of all of this technology. So sometimes people think, oh, well, we don't need stock exchanges anymore. We're all just going to trade using some peer-to-peer network. That opens the door for all kinds of risks, certainly from a regulatory point of view, from a financial security, stability point of view.
All right. And Cleary, what are some of the risks we face, really?
Well, I think your disintermediation point is an important one, because I think, as I noted in the presentation of the report the WFE did with Oliver Wyman, exchanges who don't get the market integrity thing right, where we don't enforce that in our markets appropriately, do run the risk of being disintermediated, because, as Anthony mentions, there are risks in other areas, but that's only if one assumes that the exchange is doing what it's supposed to be doing and ensuring the integrity of the market and participation. So I think that's one of the risks. Being relevant to the local market and demonstrating relevance to the local market, I think, remains a critical issue that exchanges have to grapple with. And that means constantly engaging with market participants, with issuers, with investors, and understanding what their requirements are. And I think technology risks, as Anthony said, technology brings its own risks with it, not just in the sort of algo trading space, but just in technology breaks down sometimes. And making sure you've got the right processes and techniques in place, that you are properly equipped to deal with cybersecurity. I mean, the WFE has a working group which the Nigerian Exchange is a member of, and we hope the NSE, the Nairobi Securities Exchange, will join soon, where the exchanges talk to one another specifically about cyber risks that they identify and how to address those appropriately. So again, I agree with Anthony, collaboration, working together. Integrity is a differentiator, but it's also a non-competitive area. We all have an interest in providing the best possible markets that we can.
All right. And from where you sit, what are some of the top risks in terms of, from a cybersecurity side of it?
Not really my area of expertise. But actually, we did publish a paper at the end of last year which took an interesting, different angle on cybersecurity, which noted that for many exchanges and other entities, the risk is not, in fact, a risk of an external hack.
Yes.
It is the risks associated with people internally, either doing something like clicking on a video link to watch videos of cats, or staff leaving with a USB stick with information on it. So usually it's behavioral challenges within the organization, which is why cybersecurity governance is so important within the organization. The protection against external threats is obviously very important as well, but making sure your people internally understand, that you don't just respond to an email that looks real but may not be, or click on links that you don't identify the sender appropriately.
All right, interesting. And back to you, Anthony. From a UN point of view, do you feel there's more that can be done in terms of trying to reach out to African countries and, of course, drum up the sustainability agenda?
I think one of the key things, particularly if we're looking at it from an investment point of view, I think that there can be a lot more work done to drive investment to Africa, particularly when we think about portfolio investment. I mean, Africa has a good record around foreign direct investment, but the portfolio investment, if we think about, you have enormous pension funds, institutional investors in Europe and North America operating in a close to zero interest rate environment. There are opportunities in Africa. All too often, African markets are put in this box labeled, emerging markets, frontier markets, and somehow stamped high risk.
Sure.
But I think people need to unpack that and say, maybe that's not really the case. Let's really take a look at what's going on here. I think there's some great investment opportunities here, and I think we can all do more to channel more investment into Africa. You can imagine, even if you start unlocking 1% of a very large institutional investment fund in Europe and North America, this can triple the investment flows coming into Africa from these sources. So I think this is something that we could look at.
All right. And as we come to the tail end of the interview, Cleary, from where you sit, talk to us about what's in the future. Where do we see the financial markets heading, say, in the next 5 years? In the context around, we're seeing a lot of disruptive technologies coming through. We're also seeing integration of markets. And over and above that, financial literacy is also sort of improving.
So I think there's going to be, there was a comment made earlier about the scale and the scope of regulation of markets that's been going on. I don't think we should expect that to slow down anytime soon. I think that's going to continue. So it is important for exchanges and other market participants to collaborate to see how they address that and how they ensure that that's implemented appropriately in their markets. I think the other things you talk about, the disruption from technology, I think that is real. But the WFE did a report with McKinsey that we launched earlier this year where we talked about, this could be a disruption, but actually many of the fintech firms that are starting up are not focused on competing with exchanges, but offering complementary products. So there are real opportunities for exchanges to collaborate with fintech firms to deepen and broaden the sort of offerings that they're able to provide to the market. Other challenges, I think we're going to see increased focus on the post-trade space, so not trade execution, but the stuff that happens after it, the boring stuff no one wants to talk about, but that is so important. Yeah. And then I think, to steal Anthony's thunder, I think sustainable finance is going to become one of the defining themes of financial markets over the next 10 years.
All right, sustainable finance. And we'd also like you to weigh in on this, Anthony, as you also give us a forward outlook around the green bonds. How big will this be?
Well, I think one thing, if you look at the growth trajectory, it is expanding exponentially every year. It's almost doubling, and yet if you see just in absolute terms, it's still, or relative terms to the global market, it's still 0.2% of the whole market. Mm-hmm. So even the march to 1% or 2% is still a huge growth trajectory. So there is ample room for growth in the space. And as Siobhan was just saying, sustainability has really become a key mainstream material issue for some of the biggest investors in the world. So this is a trend not only on the green finance side, but other sustainability areas we see continuing to go forward and increasingly integrated into investment products and investment practices.
All right. And ladies and gentlemen, I'd like you to give us your closing thoughts on perhaps what are some of your takeaways out of this conference?
So some of my takeaways certainly are that African exchanges remain committed to growing and developing their markets, which is very heartening to see. That focus on regulation and ensuring that proper market integrity is in place is critical, and that people are recognizing the opportunities that financial technologies provide and that innovation provides for Africa, hopefully at some point, to leapfrog some of the other markets in the world.
Great. Dr. Anthony?
I find it just a great experience to come down here and you meet so many different capital market players from all over the continent who are involved in different dimensions of the ecosystem. And what, of course, is heartening to us is how many of them are directly involved in introducing new sustainability products or green finance products, whether they're the exchanges or brokers or banks. So we think there's, again, a lot of momentum happening in this space. There are a lot of lessons learned here that we can take to other parts of the world. And then there's also, I think, tremendous opportunity for collaboration. And that's something I think I'll just end with, is just that I'm always impressed with the spirit of information sharing and collaboration between the markets here. And we think that that's an excellent trend and an excellent example for other regions. All right.
It would be unfair for me to end without asking you guys about blockchain or the cryptocurrency. What's your, in one line, what's your takeaway on this?
So on cryptocurrencies, I think we are going to start to see greater regulation of cryptocurrencies and cryptocurrency exchanges, given some of the big scandals we've seen coming out recently and the thefts from crypto exchanges. And I think that's appropriate and heartening. And I think longer term, with both blockchain and cryptocurrency, it's a longer term question as to whether or not they're going to live up to the promise that the proponents of these technologies are putting out.
Raising very valid question around sustainability.
Yeah. I think with cryptocurrencies and blockchain, it's important to separate the two. I can easily imagine blockchain living on as technology. Cryptocurrencies, if my advice to any investors watching your show is I would not put any money in that you wouldn't bet at the casino.
All right. Yeah. Well, a lot of interest around this topic, of course. Many thanks for speaking to us.
Thanks, Harry.
What's the story around the sugar sector really?
So the sugar sector, speaking about Umias, is more of a speculative play right now.